Okay, hello everyone. This is another episode of Stop Losing, Start Trading with Rosalie, where I go over the Panoptic UI, I go over the strategies with Rosalie, try to teach her how to stop losing trading meme coins, but rather be a sound investor and use options as part of a strategy in her portfolio. All of what we discuss here is not financial advice. Don't take this as a suggestion for trading. This is us just talking about protocol Panoptic available to everyone except US users, and also just to have an idea of how I personally think about trading options, but also how kind of Rosie can grow and learn at the same time as use the audience. So, all right, how is it going today, Rosalie?
Good, good. Yeah, it's going well. I think, yeah, the market's a little down, but that's okay. I think my positions are probably okay, or intern's position. And I'm just eager to figure out kind of what to do now with ETH going down and just trying to, yeah, learn more
Yeah,
risk.
we've seen a bunch of testing. Like, I'm not a technical analyst type of guy, and we can look at the price, but we do see that it's been going down around the 2,500 ish point and coming back in once in a while. We had another one, a few of those over the past few hours and days. Uh, it seems to be kind of going in a sideways motion, which is what we like. But then the fact that it's getting on a downtrend, we can also go over that on the UI, but that means that people that were trading options a few weeks ago, maybe 2 weeks ago, are now trading at a much lower price. They may have in the money options. If they sell a put, the put could be in the money. That's one of the thing about options. You set up your trade with some directional assumption. If the assumption is wrong, maybe the best thing is not to panic, but maybe reconsider or readjust or roll your positions. Since we've been doing this over the past few weeks, nothing major has happened, so it's very easy to trade. But for those that have been around, understanding how to manage a put option that's going the wrong way or a straddle that has kind of one of the leg outside of the range is something that we'll cover here. But overall, the market's been pretty tame, going back and forth. As I mentioned, maybe every day that we do this, it's a good market to be in if you are a kind of delta neutral options trader. And this is what I do. I'm always wrong directionally when I think it's going up, it's going down, vice versa. So I say it's going to be range bound. I try to hedge my bets and say if it moves, but not too much, I'm in a good position. So that's what I've been saying. The market kind of also works like that until it doesn't, and then you have to kind of change strategy, perhaps, especially these large jumps. But overall, market's doing good. Any coin that has caught your attention, maybe in the meme coin world, Rosalie, or
Nothing new recently. There's a new coin called Numbers that I'm following closely, but
okay,
yeah.
is it a which ecosystem? One of those? Oh,
No, oh, it's not. No, it's new. It's really fun. I guess it hasn't made it on the list here yet.
so new. And then, so you mostly trade your coins on maybe Solana and Palm.fun, or you try to do the EVM chains?
Y-
Where do you
Yeah,
kind
in my MetaMask wallet.
of? Okay, and then we'll talk about this. But Uniswap V4 launched. We have already a few of those token launching platforms on base. Now on Unichain, we'll cover this in the second half of that uh, meeting because we have options hour with Brendan where we discuss the daily, the weekly kind of news and whatever is worthy of talking about. And definitely Unichain is a big event, so we'll talk about that. But yeah, same thing for me. I'm mostly doing my trading in ETH. I have some of it in Bitcoin, and then we may now in on the platform on Panoptic we favor two markets, which is a Bitcoin and Ethereum for the point system. Maybe we'll add another one, which is Bitcoin and stablecoin, where you can actually trade that ratio. So wherever you see here, which is 100K, you can buy calls, sell or sell puts to kind of get that directionality. So that's going to be what we maybe do next. But yeah, without further ado, this is when we trade, we discuss those trades, and the account intern.panoptic.eth may or may not decide to do these trades. Here in the UI, we're on spectator mode. So we can actually see what intern sees whenever they log into their account. We can look at the points leaderboard, and we've launched the points last week. They've been collecting over the past few weeks, but now it's live, and a bunch of people have been depositing, have been trading. We see the points kind of tally. So a few that are maybe on the sell side and creating markets are getting a lot of points. A lot of people are depositing and earning points every day. So there's one uh, intern.panoptic.eth. They are climbing the ladder. They were, I think, 85th or 84th. Now they're 68th, banking those points and making, again, accumulating those points. There's the Panoptic intern, which decides what to do. We're in a tough competition with Ethereum intern. We don't want to dox them, but yes, they are also part of this. Maybe Panoptic intern with their option sharing strategies, with their active management, may also kind of reach a higher rate. But yeah, overall, this is very fun. We kind of use the points as a way to incentivize behaviors that are beneficial to the platform. And if you want to be passive and depositing, you can earn points. But if you want to be active, you can buy options and earn points. If you sell options as well, you can earn points. So it's all kind of built to kind of incentivize good behavior. So yeah, so this is the market that Intern has. So maybe at first glance, I'll try to maybe zoom in so that the numbers look a bit better. So all right, put yourself in the shoes of Panoptic intern, Rosalie, and you look at this. What do you notice? What do you see?
I think it's time to close the cult position.
And
It's
and
looking
why do you think that from that interface?
because the buying power usage is at 100%.
Okay, yes, very good. So the buying power usage, this is a concept that's pretty unique to the world of options. So if you come from the perp world or spot trading, this buying power usage is not necessarily something that you deal with. But in the options world, you have collateral, and then you trade against that collateral, and your buying power decreases the more positions you have on. In that specific case, Colt was a coin that Rosalie was invested in, wanted to get out gracefully and hopefully make money on the exit, which was buying put options. And we were seeing this over the past few days. Buying power usage increases for that position, and by the time it reaches 100%, then that position is liquidatable. And this is what we see on that kind of chart here. So that position is technically liquidatable. She's not losing money, but she has spent, if you want, the collateral that she set aside. So she can either add more, intern can add more funds, or we close the cult. So on that interface, we can look at cult. The PN, maybe we'll show it in cash. So there's a slightly easier way. It's a small position. It was 95%, $95 worth of collateral, and part of it was the cult tokens that Intern had. They want to exit. Out of 95%, that position losing $30. So it's still pretty bad. 7% of that position is down. The key point is that the streamia, which is what the cost of buying an option is pretty high. So we can go from that window to the details page, and then from there we can see a lot more information about that position. So yeah, maybe it's the Groundhog Day, but yes, what do you notice on that position? Maybe the P&L chart on this side.
Yeah, I mean, like we discussed last time, directionally it was correct, but it just didn't move enough into the green. So I think now with Streamia accumulating over time and everything, it's probably best to close it.
And yeah, so the thin line we see is the price at mint. This was a option that was bearish in nature. The price did go down. I really want to see it go down to zero very quickly to get into that like pure profit zone. Unfortunately, it was kind of very range bound, and the more we wait, the bigger that kind of red sector goes. So here, even though she made some money on the price move, she paid quite a bit in terms of premium, and then we can see it here as well. This is the premium or the fees accumulated over time by that position going down. It's always going down if it's in range, so it stayed in range the whole time, unfortunately. So yes, I would agree that this is one of those where we cut our losses, not because we're bored with it, but because we are liquidatable. And that means that if we close it and are fast enough, we can close it pay what we need, but then get all of our funds back. But if we're getting liquidated, the liquidator will get a bonus. So they would get a little bit of our collateral as a bonus. And we won't go too much into the details, but the bonus structure in Panoptic scales with maybe how distressed the position is. So in that case, it's 100.12% utilization. So the bonus is related to that 0.12% of collateral missing. So the bonus will be 0.12% for that liquidator. So it's a tiny, tiny bonus, probably much less than the gas. So that's why sometimes, even though it's liquidatable, you can think it may recover and that's fine, but you can be kind of in this danger zone between being liquidatable and liquidated. So in that case, the smart solution is to lick our wounds, close that position as soon as we can, maybe redeploy. Maybe this is something we'll revisit in the future. But at the end of the day, that means that unfortunately that position hasn't worked for us. So Colt, we can cross it from our portfolio or intern's portfolio. All right, so we had three other positions: one in the BTCE, one in the USDCE, and also ticker Bitcoin. So is there one in particular you want to look at?
Yeah, we can look at ticker Bitcoin. I think it's still new, so we can give it some more time, but let's take a look.
Yeah, so this is the one that we discussed on Monday. Intern didn't listen to us last time on Friday, so they redeployed it. This is again, that row has a lot of information at a glance that could be helpful. So the buying power is 50%. So this is a good spot. You don't want to be overextended or under allocated. This is a pool where there's not that much extra liquidity, so you can go a bit higher in terms of buying power usage. You can see also in cash terms. There is about $500 of collateral deposited. This has lost 88 cents, so it's not too bad. Let's have a look. Same thing as before. When we go on that details page, we can click on that P&L. We see the chart. So what do you see? What do you notice on that chart?
Price moved down a little bit.
Yeah, the price estimate was here. It went down. We can look. You're a tiny bit in the red. We can change this and make it a bit more obvious, but it's actually pretty tame. And if we look at the P&L, this is where the 88 cents, I guess, of loss come from. So directionally, you're not wrong. It was a bullish strategy, thinking the price of Bitcoin will go higher compared to ETH. It moved a tiny bit, but nothing to worry about. So this is, yeah, you're still in range. You're still collecting fees, so that's fine. Anything else that seems to be on the green side, maybe?
Yeah, the premia.
Yeah, so the premia is, because this is selling a put option, it's still bullish. You want the price to go up, but as long as this is in range, the position earns premia. So here, every block that goes by, they earn some fees. And currently, the 5 Bitcoin is what she earned, or the intern account earned on the Bitcoin size, and then 0.0018. So a tiny bit of ETH as well. It's going up. This is what we want to see. The more it stays in range, the more the profit is realized, the more that whole curve shifts up. And in that case, there's not much more to do. So it's been a run over a day, 0.3% in a day. As long as it's in range, it's fine. So it's one of those there. It's so new, so recent. There's not much more to do than just look at it. All
Okay.
right. So
Right.
so yeah, this is good. We'll see. I'm excited to see where this goes as well. We had two other positions, one in the RAT BTCE and one in the USDC. So anyone that you want to look at maybe first?
We can do ETH first.
Okay. So ETH, this one, the P&L for that whole position is $15. The position earned some streamer, which is the fees $16. So we can even see from that row that the price went down a little bit, perhaps. Delta, we don't cover too much, but then we may discuss this now. So yeah, let's have a look. This is a straddle that was created 5 days ago. And that straddle, we can have a look at the P&L chart. And yeah, what do you see?
Yeah, I think the price went down a little bit and still within range. I think the range is really wide, so it should be good for a while and collect a juicy amount of
Yes,
fees.
exactly.
Yeah.
Exactly. So the price was here The price went down a tiny bit, nothing to worry about. So this is also good. If you look at the range, it's pretty wide. So from 2200 to 3500. So that may seem wide in terms of price move, but we were at 3500 maybe 2 months ago. Maybe we'll go 22. So this, in a sense, is a good range to be in. And it's a good range for a what we call a monthly option. If you trade a day to day, very, very short dated, then these small price moves can create a lot of losses or gains. But if we take a step back like this position and create something that's very wide, and this is actually in the 1 month type of time scale. So we have kind of 1M, but 1 month. So that position we expect to be in range most of the time after a month. Maybe it's going to move out of the range, maybe it's going to stay in, but statistically, it's going to be more often than not in range. So this is how we approach this. And after 5 days, being in range is almost 100% certainty. We'll see after 25 days if it's different, but overall, this has worked for the intern account. It's in range. Uh, it earned fees and it earned kind of streamia, which makes that whole curve shift up. And then yeah, there's a tiny bit of profit of $15, $15 in 5 days. We can imagine that again after the month could be $100 ish, depending on the price move. And the more we wait, the more the break-even points widen, the more profit zone kind of gets larger. And as long as you're in range, which is what we see here, you always collect fees. So you get paid for taking some risk, but the more patient we are, the longer we wait, the more kind of that risk gets rewarded.
And since we spoke about delta a little bit last time, this would be considered more of a delta neutral position, or?
Yes, exactly. So the delta has kind of two meanings. The simplest one is very, very kind of mathematical, which is what's the slope of that curve here. And what you have to notice that it's kind of flat-ish. It's flat on the top here. It's very, very steep on the sides here. So the delta goes from 100% to negative 100% on both sides. But in the middle, it does meet, and you get something that's close to zero. In that specific case, I think the delta is going to be 17. And as long as it's between maybe plus or minus 25, you're in a good range. So this is a delta neutral strategy, meaning that you earn mostly on fees. Price moves don't affect you as much because this is flat here.
Okay, that makes sense.
And the this is when you're non-directional. Your thing's going to be range bound, so you're not subjected to these moves. If you had a positive or negative kind of market kind of prediction, then it's a different trade. But yes, this one is delta neutral. It's a similar delta neutrality than maybe the carry trades that people like Athena and kind of a lot of folks do in TradFi. Here, the risks are that if you're moving too much, you get a lot of exposure. So a lot more risk maybe than say buying spot and shorting the perp. However, because there's more risk, there's more reward. So you can imagine the funding rate effectively or the return of a delta neutral position like this is going to be much higher because of the implied risk than that kind of carry trade long the asset, short the perp, which has less risk, and the only risk might be kind of funding rate reversal or kind of maybe depeg or something like that. But it's more distant here. Price moves is what the risk is. So in that case, you earn quite a bit more. So again, almost 1% in 5 days. You can think of this as kind of being a 50-ish% if you have the whole kind of even 60% or 50-ish% return in premium per year. Of course, there's price moving, but yeah, that's the balance that could exist.
Okay.
Higher risk, higher reward, more risk of loss, but also more consistent wins if you want.
Mhm.
But yeah, so again, the it's working perfectly. Want to be in range. This is controlling $2,000 worth of notional value. So that position is Rosalie controlling $2,000, but her requirement is only $450, so more, about a quarter of that. So that's actually where the power of options kind of manifests itself. It's an inherently leveraged product, so you can borrow and magnify the risk, of course, and magnify the returns at the same time. And here again, she was able to borrow like 4x type of leverage on that position.
Cool. Yeah.
All right, so we'll finish the. So again, when we discuss those, most of the time there might not be anything to do, and that's okay. This is what we expect that a trader should do. Don't try to be in front of your computer 24/7 to catch kind of the falling knife, but rather make yourself in a position where you can still survive if the price moves 10%, and then you miss out on that. You can come back the next day and you'll be surviving. So here, another trade that we created, uh, we discussed and in turn created. Sorry, is that Bitcoin ratio. So again, can you remind? What do you see? And can you remind me what was the kind of directional assumption for that trade when we created it?
Yeah, I think it was bullish on BTC and bearish on ETH.
Yes, and it's not, and then this is fine to have a directionality. It doesn't mean that we think ETH gonna go to zero and Bitcoin's gonna go to infinity, but it's just kind of given the local environment, you can be pair trading, and that's definitely fine. Maybe ETH is overextended, BTC is overextended, so there's a trade for that. So at the end of the day, Steve was kind of right directionally, and this is the ratio that we're trading. So even the price movement is kind of distinct, even though you're maybe at 100K in the Bitcoin world, the actual kind of ratio could stay stable. So in that case, the ratio is kind of range bound too, so it doesn't move much. That's okay because we're setting options. She's earning some fees, 1.2% in a week. Again, could be 50% over the year. Um, and the directionality was good. So overall, this is another trade where unless we hit that plateau, which is your max profit, we're still pretty close to the initial point. The only thing we can do is to wait for either the price move to realize itself or earn enough fees that it's worth kind of keeping on.
Okay, yeah, that makes sense. But took one out of range position and moved it in range. I think I like doing those. It always makes me feel
Yes,
like I'm moving something important.
exactly. And this is kind of the not the power, but the cool thing about Panoptic is that you can move, you can readjust, you can actually take control of some other traders liquidity that they haven't kind of took notice of. So in that specific case, if you look at the highlight, this is a call option that was sold by someone else. The call option is out of range, it's not earning anything. That person should close this call option that they sold because they get paid anything, but they haven't done it. So we can actually buy this, move that liquidity out of that range that's dead and not earning anything, to move it in range where it's actually earning fees. So this is a smart move for anyone that looks at the market and sees some of these inefficiencies. Liquidity out of range earns zero, so you have a free loan if you think about it, and you move it to something close to range. And because now Intern's a seller, someone purchased that liquidity that's being sold, and Intern now earns more in fees because someone purchased. So they borrow that liquidity, they pay you more because it's in range. They actually pay you for it. We can do some investigating. Maybe we'll go over that a little bit more details in the future. But you can see who's buying. You can see what is uh, the directional assumption of these users. But here, not just buying out of range liquidity is the smart move, but also moving it to a place where people are already buying it, so that you get paid more for that. But yeah, I think that's it. So I would say we have four markets. One of them is about to be liquidated, so the intern should definitely look into that position and hopefully manage this before it gets liquidated. But because we have four markets, they've been kind of working somewhat together. The P&L at the end of the day, you want to have multiple markets. You diversify your strategies. Some of them may be losing, but you win on some others, so that on aggregate you make premium, you make fees, and you kind of are net positive. Here, made their dollar overall, but despite that big loser, the other ones offsetted that. So I'd say that there's not much more we need to do. So this is a good portfolio, and this is going to be something that the intern will just have to manage that position. But overall, it's good. So nothing else to do.
Cool. Okay. Yeah, I think maybe next time we can do a little bit more ETH
Yes,
trades
and yes,
since
the
there's just one.
all of these positions are pretty high in buying power: 43, 51, 100. This 5%, the bulk of the funds are in there as well. So we don't want to overextend. So that one position is still kind of $400 of collateral, but we can go higher. So next trade might be to create a new position, slightly different strategy, but that could also kind of benefit. So yeah, that sounds very good. So and then maybe we'll add a meme coin or something like that. So or maybe one layer two speed chain is launched. So we'll see. So overall, yeah, this is great. Any last minute addition or comments, or you're good?
Yeah, no, I think I'm fairly happy with a dollar in profit, even though I lost, almost $70. So that seems to be offsetting the risk
Exactly.
reward pretty well. So I'm not too
And
mad.
this is also, as a trader, this is what you have to do. You have to spread the risk, both in terms of underlying. So you have multiple underlyings that have low correlations with one another, and maybe meme coins are the ultimate uncorrelated asset, but also have a diversity of strategies. Maybe you sell something bullish on one side, buy something bearish. You can actually diversify as well, so that if it works against you, you still have offsetting positions. So, and the straddle that we created is one example of this: two legs offsetting one another. But yeah, perfect. This is good. So all right, so we'll thanks a lot, Rosalie. We'll move to the options hour. I'll add Brendan to the mix and stop sharing my screen. But hey, how's it going, Brendan?
Hey, good morning. Good options hour, and it was great seeing the trades. Very excited to be here. I see we got some questions actually in the
Oh,
chat about some stop losses. It seems to
perfect.
be a common topic coming up.
Exactly. So, but yeah, again, I'm sure you're jealous of intern accounts, uh,
Yes, rising
not
up the
losing money
leaderboard there.
despite the brace move. But yeah, well, thanks very much, Rosalie. I'll wait to the back. But yeah, maybe we'll go over some of these questions. Uh, this is good. So, is this the one
Yeah,
you're
so
referring
we
to?
we got a question from Mushroom Ape there. You see it on the screen. Basically asking if can you bet just on the upside by setting a stop loss, like a -1% of risk. So yeah,
Yeah.
that's the question for
So
options.
and let's go through the process of creating that position. Yes, the stop loss is one aspect that a lot of folks are familiar with trading perps or spot trading. It's not really possible to do on Panoptic because of the it's an AMM, so there's no way to add an order or to kind of an underbook. But that particular question was about betting on the upside with a limited loss, meaning the stop loss will prevent you from losing too much if the price kind of goes the wrong way. So the easiest way to do this, it's kind of not unlike what we've seen with Rosalie and Intern, but you can go to the trade page on the Panoptic account, go to select strategy. In that case, if you're bullish, you want to see the upside, we have a few kind of options for you, but the one that is very close to what this person is doing is buying a call option. And buying this call option will create something that looks like unlimited upside, betting on the price going up with limited downside. So that stop loss effectively would close your position, realize that loss to prevent further losses. And in that question was candle wicks. Maybe someone moves the price for you, you get liquidated. So that's something that is mostly relevant to perps and spot trading. If you trade options, you have this kind of protection built in. So the fact that it has a payoff which is limited on the downside, you pay for that kind of protection to some extent. But the upside looks very much like a perp, but the downside is to some extent including a stop loss. If it goes down below your range, you will actually not lose more. You've lost something and it's gone, but then it's not gonna further impact you. So that type of trade is maybe what perps trader would find very very attractive, because you can now have something that looks like a very high upside. If you think it's going to go above 5k, then this is a fantastic trade. And you have limited or capped downside. So the stop loss slash how to protect against these price moves is something that most perp traders have to worry about. But in the options world, it's all built in. The protection is given to you for free, or at least you pay for that options premium, but you don't have to set up the option stop loss right away. It's built in. So that protection is what makes options a lot more attractive, in my opinion, for those that have a strong directional bias to the market.
And the second part of the question here about getting stopped out by the candle wicks is a big advantage of options too, right? Just because if the candle does go down past that -1%, you're not getting stopped out with the option here, are you?
Exactly. So it's forgiving. You don't get stopped out. So this is the price, and that wick is probably the biggest one we had over the past few days. But even if the price goes down, you don't get out exited of that position. Price can recover, and you can still be correct directionally. And this is kind of the instrument has this built in, and the that might makes it a lot easier to trade, a lot easier to manage, a lot easier to kind of resist some of these single wicks, because it's forgiving. If you're wrong for a while, maybe you just have to wait a little bit longer and see it go. So the way that you would do this is to, again, buy options if you think the price is going to go down, up. I mean, you can sell up, you can buy puts as well to have a similar kind of upside on the way down, which is the call trade we had. Or maybe something I prefer a bit more is to sell options. So be on the call of selling, on the side of selling. You can still have some upside to it. It's capped, but at least you get paid for it. So it's all about trade-offs. But yeah.
Wonderful. Great question, Mushroom Ape, and a great answer, Guillaume. So yeah, got a couple of kind of market stats to share. Yeah, so we can go over. I'll share my screen. Maybe you can add my screen share here.
Oh,
Are you
yes.
able to add the other screen there? Wonderful. Okay. So yeah, first off, just with the Panoptic volume, so things have been trending up. I think we've seen a steady increase. So here is a Dune link that's actually public. So if you ever want to check out the Panoptic stats, you can go to this Dune link that we'll share in the chat here in a bit, but Dune.com. And you can actually just see the whole notional volume of options being traded on Panoptic. So we actually hit a big milestone here, 2.5 million as of just a couple days ago. It looks like February 7th there. And yeah, so
I mean, I think what's interesting here is that maybe the lull that we may be seeing around January 19th is the market not doing much. And this is what happens in options trading. People sell monthly options. You have to be patient and look forward. So if there's no move, which could be kind of that choppy price action, you're fine. So you don't have to adjust. But again, maybe the 25th might be when the crash was. But when there is a big move, when you have to kind of adjust or manage, this is when notional volume increase or picks up. So we can actually even compare that trading activity with volatility exploding. Volatility means people trade on spot, but also they also have to manage and trade on options. So the we might be able to see signatures of these kind of price moves in the notional value traded because people are managing their position.
Interesting. Yeah, I guess you see this big spike up kind of in the, I don't know if this was the DeepSeek days, but yeah, a bit more volatility going on and a bit more trading there. To add to the market roundup, V4, as many of you know, launched about 2 weeks ago, week and a half ago or so. And here are the Dune stats for there. So this is also a public Dune URL you can use to view the V4 stats. So there's about almost 50 million in total TVL on V4, basically across all chains. Most of that being on Ethereum mainnet again, so no surprise there with the L2s kind of catching up later, it looks like.
Wait, yeah, can you? This is also interesting. So
But, yeah.
40 million on the mainnet, but then what's the next biggest one? Yeah, 3 million. So
We're at 3 million on base. Actually, I think the next biggest is Arbitrum, as it is with V3 with 4.6 mil. BNB has less than half a mil. Polygon 1.5. Optimism a little more than half a mil. Avalanche is a little bit slow here, and World Chain, I don't know what that is, but if you know, let us know in the comments.
our friend Sam might be the sole LP to that pool. So again, maybe we making a choice of launching on mainnet first, and maybe we have the proof in front of us. Liquidity is still massively kind of deployed on mainnet. Uniswap is ultimately the place where everyone goes when they want to trade. So even if you have a layer two available, a lot of folks may use mainnet. So the fact that we can work and have launched Panoptic that works on V4 is very, very good. But also we can tap into that huge pool of liquidity on mainnet. So of course, gas is an issue nowadays. It's actually pretty good, but we don't know how long it's going to last. But the key point is that liquidity, the amount of capital available, traded, uh, borrowed, and shorted, and used to back up options is still quite large on Ethereum. And again, regardless of the roll-up centric roadmap, I think Ethereum will always have kind of a special place for the investors, and will have that kind of be their home base for a lot of those trades.
So do you think the real world assets that everyone keeps talking about every year and that haven't come yet but are coming, do you think BlackRock and the likes of them will be launching on something like Ethereum versus a roll up or even a Solana there?
Yeah, so there is definitely kind of you might have seen this take on Twitter as well, but if you launch a token on layer twos natively, it has to be bridged to layer ones, but because it's natively to layer twos, there is a huge trust assumption you have to make to the sequencer and whoever manages that chain, because they can cut you out, they can censor you because it was a L2 asset. It doesn't have the kind of property rights of an L1 asset. So even if you think the next layer two is going to attract a lot of the activity, the security, the actual certainty that your coin is your coin and cannot be censored or kind of prevented from moving is only certain on layer ones. So BlackRock, I would say, would be smart to deploy on layer one, maybe bridge layer twos and have all of the trading happen there, but still have layer ones be, because it's so secure, the home base for RWAs, issuance, like folks like Circle and USDT can issue coins natively on layer twos, but then they still are to some extent subject to that same censorship issue that the sequencer can have. So I would say it has to be layer one. It has to be on the most secure one chain. It's ETH or Solana or maybe something else. Again, we ETH has a proven track record. We don't know what's going to happen with Solana. Maybe when we launch Panoptic there as well, it's going to shift the tide. But I would say that the BlackRock team, if they are as smart as kind of people say, they will likely look at the safest, most secure chain to launch, and maybe bridge their own L2, but still have the coins be natively there. So again, for Uniswap, for Panoptic, for anyone, even Aave and Morpho and all of these lending protocols and order finance, they also want to have a mainnet presence, because now the friction of moving to a layer two may be too much for most. You get them on layer one, lend them out, one transaction, maybe it costs you $15, but it's done, as opposed to do multiple trades on bridging and layer twos.
Interesting take. So if you issue them natively on L1 though, and then kind of do all the trading on the L2, do you think there'll be like still liquidity available on L1? Is it just the issuance or
Maybe
is it the liquidity too then?
yeah. So the friction is bridging back, getting the exchanges to accept it will add some friction to this. But yes, if it does get to a point where each transaction on mainnet is $1,000 and you want to move $500 worth of coins, then yes, you'll want to go on layer two right away. But I would say that the Black Rocks of the world, they are gas agnostic. They don't necessarily care about high TPS or gas fees if they move billions. They may have a few thousands of tens of thousands of dollars of gas costs over kind of a few days or months. It's not going to put a dent in there. Kind of, it's much cheaper as well. Even now, much cheaper with the gas. So again, I would say that the if you trade options and you do it at scale, it used to be people calling each other on the phone and guys shouting in a pit, but the instrument, the actual backing was pretty real, pretty concrete. You needed to have banks being truthful to their word. You need to have traders and brokers to have kind of the cash available to execute. So the act of trading options has to have trust components that could be unbreakable like Ethereum, or could be based on reputation like it used to be on kind of the trading floors. But it's not necessarily the how complicated it is because people shouting, they didn't hear you, that's fine, but you shout again. Same thing with transactions being a bit costly. Maybe you wait or you do it still. So yeah, I would say that the current status of layer two's fast chains is a lot what retail wants, and this is a lot of what kind of makes sense from a retail perspective. You don't want to spend $15 per trade, but then for a BlackRock or any large market maker in this world, it's probably not going to be that big of a deal.
Interesting. Yeah, I think retail wants to save on gas fees, but they want to know if their ETH bags are going to go up. So
And
not
similarly
financial
for you,
advice. But
so we can. I still trade on mainnet for most of what I do, is including Panoptic. But yeah, for you, do you mostly live on layer twos, Brennan, or I know you were a big
yes,
Cosmos fan for a while.
personally, I do. But that's just my personality of like savings, and I go to Costco to pump my gas to save $2 in real life. So
Drive 40
it's more
minutes
of
to
a
get
yeah. Maybe it's a temperament, cultural thing of saving an extra buck or something. But no, I totally. I think the biggest surprise for me, because I was doing a little bit of just some testing stuff on Panoptic, right? And we're on Ethereum right now. We got a big launch coming up with an L2 maybe shortly here, but the gas fees were a lot lower than I had expected, because I had never really used mainnet to swap and to do like NFTs. Well, I have okay. So in the past, I used to mint NFTs on mainnet, and it was like $70, $100 gas fees. So I think that was during the peak, kind of when gas was high. But at least when the Gwei is really low, like it was like less than $1, sub-dollar transactions to approve and deposit, and then like maybe like $1 or $2 to even put a trade in Panoptic. And so like I could see, like, if you're trading, a few $1,000 notional or more, it actually pretty much makes sense, because the hope is you're going to make back 5, 10, 15%, and the gas fees are maybe like 1% initially when you open and close. So it was surprising to me that it is actually pretty doable on mainnet, at least even for someone who wants to save a few bucks like me.
metaverse. Yeah, and again, I'll tell you, I like, we didn't go over it, but I like to look at the gas price, and this is Gwei Station. But yes, it's actually pretty small for a lot of the time, like that people can be alive at work and trading. So sub one Gwei, sub two Gwei is unheard of over the past like several years, and we did see this routinely. So I don't know if it's the gas limit, the block size increased, or a lot of the active trading happens on layer twos, or the blob kind of used to take a lot of gas, or at least block space. Now it's fine. We still see some of those peaks. It's still maybe now going to be more expensive to trade on Panoptic. Instead of being $1, could be $10. But if you're building it right, you don't have to react kind of minute by minute. And I'm sure this might be kind of a price move on the price. But again, maybe the way that each scales is that a lot of the large trading that needs to happen now generate these huge peaks of gas and volatility in the gas price. And then, but most of the time, if you're patient, you can actually do most of your trading at minimal cost. And again, with account abstraction, you can imagine that the default is going to be you batch or you create some type of intent to create a transaction. They execute it in the best way possible. They reimburse you the gas costs. A protocol like Panoptic or even Uniswap could say we're going to redirect the interface fee for paying gas. Same way that Robinhood made kind of trading the stocks free, but then they made money on the options world. There is also kind of savings that could be happening, and the $5 that we pay if we time the market right for creating an option Panoptic, it used to be $50 in TradFi in the 90s and 2000s to create an options trade, and people were paying it, but then a lot less people were trading it. Now, if it's $0 or $1, a lot more do it, a lot more are able to do. But it's like part of the economies of scale. But yeah, but as you say, the
Yeah.
gas is pretty sweet, at least for me, because I do a lot of my trading on mainnet. And if there's a spike, I just stay away for a while and be patient.
Yeah, I think it's that spike trading that turned me off. But I realized when the gas is low, it's actually like really nice. And and the pools are pretty deep here on mainnet, and I really like the count abstraction thing you mentioned. I think with the Unichain launch, there's a big because Unichain, for those of you who don't know, Unichain launched yesterday officially, and there's a big kind of emphasis on this cross chain thing where you can kind of use one account and then it'll go, well, I guess like you're using Unichain and it might use a different chain and you don't even know. And some of our developers were trying to get some ETH to get on Unichain to deploy some stuff, and they accidentally bought the ETH on the mainnet using Unichain. So the ETH showed up in the wrong chain on their wallet, but they were using Unichain to buy and stuff. So, anyways, it's the whole future of this. You know, maybe you're putting an option trade, you don't care which chain it is in the future, and Panoptic, it'll find you the best Panoptic pool. I
No,
don't know.
yeah.
This is, you know, in the
This
future
definitely,
abstract world, right?
and again, I don't doubt this is where we're going. The account abstraction and kind of cross chain interops is a huge step in that direction. And even now, you trade a stock, you buy Nvidia, it's like routed to different exchanges, or is there like payment to order flow, or is this market? You don't even see it or care. You get the best price possible as a retail trader. If you trade millions of times a day, then it's something you worry about where it gets there. But if you trade once every few weeks, it's abstracted away. And again, this is where we're going. The underlying technology will be there to serve the high power users, the market makers. We are lucky enough to be able to tag along as retail because it's open to everyone, so that I can put my trade in front of some other market maker and be on the same standing, which is kind of different what you see in TradFi. But yeah, no, I think the UX, everything that people are complaining about, will look like a distant problem very, very soon.
That's the hope. Well, back to the market roundup here. So V4 launched, and this does not include the Unichain stats. But V4 is also live on Unichain. But if we look at kind of where the liquidity is going on V4 initially here, huge amounts by the 1inch team, it looks like, or at least somebody from involved, or maybe some big bag holder, but somebody started a big 1inch pool on UniV4 and Ethereum. So a lot of the liquidity, 28 million of that 40, so over half, is in these 1inch pools. We've also got the stable coin pools. So your classic, actually, this is the USDE. So I think, is that Ether?
I think
sorry,
yeah,
which one is
it
that?
the
Athena,
Athena,
right?
but this is 1 BIP still. So this is, you expect the USDE, or if it's the Ether, to be a little bit more volatile, a little bit more dynamic. It's like built on top of a stablecoin type object, but it's gonna have fluctuations. So the 1 bips, to some extent, could make it very interesting to trade options on, because you have the ability to trade the ratio of, or the interest rate kind of accrual, or the funding rate type of thing, in a way that could be kind of either to offset your risk or to kind of capitalize on these moves. But yeah, no, very interesting. So I would say that the fact that we see still a lot of liquidity now, a lot of this liquidity is paired with ETH, but some of them are with USDC. All of this means that it works very well with Panoptic and the way we can trade. I'm surprised by the amount of capital in the 1inch pool, and I'd say that could mean that it's like the best price you can get. I mean, even on exchanges, I don't know how much trading there is on Coinbase or Binance for the 1inch, but if they are managing liquidity right, that could be one of those markets where price discovery happens maybe on chain first and goes off chain for the arbitrage opportunities.
Yeah, don't want to pull LVR in here and stuff, but yeah, it's very interesting. I think a few other points to.
Sorry.
Yes, no, a few other things to point out with the V4 that some people might not notice here is these are ETH, right? They're not wrapped ETH. So there is this new feature with V4 where you can trade directly with ETH. So you don't have to wrap it anymore, and you don't have to use that. So it's going to be the same in Panoptic. Panoptic has also launched their contracts on V4. It's just the interface is coming soon with the app.panoptic.xyz support. It'll be the same thing. You can trade direct ETH now instead of the wrapped ETH on the V4 pools. The other thing is the fee tiers. There's this kind of thing in TradFi where the commissions all kind of drove to zero, right? Once one player went to zero, I can't remember if it was Fidelity first or whoever first, but then everyone just kind of followed because it was the only thing they could have done to not be left out, right? So this constant kind of fee tier driving down to zero as there's more volumes. We don't see that here yet. We kind of see the exact same fee tiers as the V3, right? You got 100 bips, which is 1%, 30 bips, 0.3%, 5 bips, 0.05%, and then the 1 bip, as you mentioned, 0.01%. But actually on the V4 pools, you could be having 0.0000, I think 0.01% pools, right? You can go pretty low on the actual fees, much closer
And
to
then
zero.
this is one thing that is kind of, there's a link between the fee tier and the liquidity in that pool, and not just kind of liquidity, but like concentrated liquidity and liquidity at the current tech. And if you want to go to 0.0001%, you can be providing liquidity, but you will need billions of volume every day to make it worthwhile. And there's billions of volume on New York Stock Exchange, so it's fine by the time you get there. But the reason why we still see these higher fees is that the LPs aren't stupid. They know what they're doing, and you need flow and orders to make it worthwhile. You can get paid again 5 bips, but if you have one trade a day, you'd rather have 1% instead of 0.05% for that one trade. So that's kind of the trade-off, and it's not quite there. But then if you want to go from 5 bips to 1 bips, it's a factor of 5 in terms of fee if you want, but in reality you have to have 5 squared more volume to compensate. Same thing.
Why is there a
Yeah, so
square
this
term
is
there?
the IV formula that we discussed actually with the research bite yesterday. The IV formula on Uniswap involves the fee tier, the volume, the trading activity, and the liquidity. I'm sorry, that in a way that gives you rough understanding. And I'm a physicist. There's like these dimensional analysis that you can do. There's some laws that it's so complex you cannot understand them, but you have one number, the Reynolds number in fluid dynamics, or the Pinkley number in like diffusion dynamics. You can capture the essence of a physical system with one number. In the Uniswap pool, that one number is IV, or implied volatility. But that IV now has some relationships within the components. So again, maybe I'll do a lecture on the Reynolds number later on. But the Reynolds number tells you about the fluid. But you know that if you double the volume of your fish tank, then this happens in a way with the viscosity. So it's actually fairly straightforward. You can go underwater to test aircrafts, but you know how much the speed has to be adjusted so that it's the exact same air versus water analogy. So this might be the aircraft in water of Uniswap. If you want to make money on the 5 bips and make as much money on the 1 bips, you need 25 times more volume. And the 0.0001, you need 100,000 or a million times more volume. We can get there, but it's just kind of rough relationship, so that when you are deploying a new pool or deploying capital, you still have to kind of look into that amount of volume that's naturally driven there.
Very interesting. Yeah, I just think because with V3 you only had 4 options with the fee tiers, whereas with V4 you kind of have anyone can make a much more smooth gradient of fee tier. So it seems like there's some type of, I can't really put my finger on it, but some type of potential inefficiency of LPs choosing, because I doubt when LPs think about this they're optimizing this equation
No,
that you're maybe referring
back in
to
my
of
research
what.
days, and the UBO, and for the OGs here, UBO was where I was publishing these numbers, and surprisingly, it's actually well respected by LPs. Some pools temporarily had lower IV, higher IV. That guides maybe the next wave of liquidity, and maybe they were using UBO or using a different way, but it was actually fairly. So the routing as well helps. If there's a bunch of liquidity, it gets more routing. If there's less, it gets less routing. So the whole thing kind of worked. And again, we don't give LPs enough credit. I think they figured out, like, if you're in a pool that earns no money, you get out right away. You don't hope that this is going to be a good pool. So, and one thing that this is the you said Fidelity, or it was Robinhood, I think, that dropped the commission price to zero.
Mm, mhm.
How can you make money, but you have this other kind of options trade, maybe, or other products that people can trade, and that's how Robinhood made money, and crypto again being one of them. So in Panoptic, we can say we dropped the fee to 0.02%, but because there's this buying demand, the fees will be very cheap for swappers, But LPs and option sellers could have a multiplier that kind of restores the returns. And you will find an equilibrium as well. It's cheap to buy an option, so you pay a bit more. It's going to be you rich, or at least you make more money selling options, so you kind of equilibrate. So you can imagine that if there's a Panoptic pool that's on the 4 bips fee tier, but gets a ton of options trading, they will generate more revenue than the 5 bips, even though it gets a less volume type of thing. So again, the market will find a way, and Panoptic adds a new layer. It's not just fees and volume, but rather this more complex layer of options trading or traders that can now supply capital and funds to the LPs.
Yeah, how interesting. And I think it's just a range of like how efficient they are. And you mentioned they're not as inefficient as you think, right? The LPs were moving around, rebalancing the IVs. They weren't doing it probably like within 12 seconds, right? But in general, there's some efficiency, and kind of how I see Panoptic too, with that multiplier and that bonus. It just, it's a whole part of adding to that efficiency. And Panoptic lets you short LP tokens and actually remove excess liquidity where there might be too much liquidity, so everyone earns fewer fees collectively, right? And so just these whole market mechanisms that didn't exist before Panoptic 2 are able to create the groundwork to make the markets more efficient. But people have to use it now, right?
I mean, like what we said in the research piece yesterday, there's a lot of arbitrage opportunities. Think of Panoptic as the Uniswap pre-MEV bot war. So there's going to be some MEV opportunities that are unique to options trading, unique to Panoptic, unique to that kind of other layer. And currently, it's very cheap to buy options. We've seen the calls queue in the ETHUSDC pool. People maybe are hoping for a reversal, so there's a lot more buying of options on the call side. So that a little bit above the range, there is kind of a richer premium. So that's kind of your calls queue. This is a trade opportunity, both on the sellers and the buyers. So again, adding an extra layer of complexity makes maybe more opportunities be present, but also makes the market a lot more efficient as well.
Yeah, well, we're about at time here, so I just wanted to quickly share the stream schedule for upcoming streams, because these arbitrage opportunities you mentioned, very interesting to me, because the whole options world is connected to the perps world through some basic finance principles, actually, where you can recreate options to turn into perps. So there are so many links here and potential arbitrage opportunities, but we're gonna discuss them. Oh, sorry for the background here. We'll discuss these more on our show here. So we have this schedule up, and this will relatively be about the same each week. But today's Wednesday, right? So we got the options hour. So stay tuned for Friday coming up. We got our Stop Losing, Start Trading with Rosalie and Guillaume again coming up at 9 a.m. Pacific time this Friday. And then after that, we'll be covering some really cool trades that have been happening on Panoptic, some of the best losers, best winners. What are they doing right? What are they doing wrong? We'll hear some hot advice from Guillaume on that. And then, of course, Monday,
If the trade is
Monday,
mine,
Wednesday,
I'll
Friday,
be
we got the
bragging.
trade.
If it's mine and I'm losing, I'll stay quiet. But yes.
All right, we just want to show that one, but no, it's great. And Tuesday we got the research show where we'll talk about things like gamma traps and arbitrage opportunities. So lots of cool bites coming out about the markets there. So stay tuned for this show. We're live here again on X and also on YouTube. So appreciate everyone tuning in and also their comments and questions. Yeah, I don't know if there's anything you wanted to cover, Guillaume, or any last
Yeah, this
words
is
you
great.
had.
So again, we like seeing you participate in the stream. Any questions you have, more than happy to answer. This is meant to be not financial advice, but still advice nonetheless. If you have any questions, we'll make our the best we can to kind of answer those questions. Stay tuned for announcements. We'll be at ETH Denver. We have a side event, Panopticon. We'll announce this probably next week, but overall, very excited to meet a lot of you in person as well. We have a special guest, very special guest. We keep an eye open on the Twitter stream. But yeah, overall, this was great. again, Rosalie and Intern are doing good. It's not the end of the world on their trading. With the market and Brendan, we see it's still going great. UniV4 and Unichain are crushing it. But yeah, overall, looking forward to seeing you on Friday and also talking about the top trades of the week on Friday.
Yes, and one other thing you reminded me of is if you're going to ETH Denver at the end of this month, please come check us out at the Unichain booth. So we're a launch partner with Unichain, so you're probably going to see an announcement come out very shortly. Actually, spoiler alert: we've already launched Panoptic on Unichain, and so you'll be able to access it very soon on app.panoptic.xyz to get those cheap gas.
They figured out how to get the ETH out of mainnet and back to Unichain.
If you can figure out how to bridge it, but hopefully the cross chain stuff works well on Unichain, so you can get your assets over and start trading soon. So visit us at the Unichain booth. We'll be there at a couple hours. That will of course post more details later towards the end of this month. But very excited to be on the show and see you all. And thanks for tuning in.
All right, thanks very much, Brandon. And yeah,